Welcome to another S&P 500 Trade Watch analysis. Today is September 28, 2022. The S&P 500 finally got a nice bounce after 6 consecutive down days, and a day after it had moved below the June intraday low. Is this a dead cat bounce, or was yesterday's low is the bottom for this bear market? In this video, we'll analyze the price action and see what the market is telling us. So stay tuned. Let's quickly run through the indexes first before we focus in on the SPY and also the ES, the Emini S&P 500. So in the S&P 500, as you see from this daily chart here, the S&P 500 closed with a new closing low from the all-time high. Before the June closing low was the low. So you can see yesterday it closed at a lower low than the June's closing low, and also it moved below this June intraday low. And today we got a nice bounce, and coming up, and maybe it will fill this gap here. And this is the upper range of the expected move, and this is the low range of the expected move. Right now it's sitting in between that. And here looking at the Nasdaq 100, notice the Nasdaq 100 has not made a lower low yet, or has not taken out the June low or closed below the June's low. So we're still waiting for the Nasdaq 100, and I'm going to show you why are we still waiting for this to come down and take out the June's low. Although today we got a nice bounce, and also on Monday it closed this gap here. And here's the Russell 2000. The Russell 2000 also did not close at the lower low than the June closing low, or move below the June's low, and also came up today and filled this gap here, and also moved back up to this 50% retracement level. And here's the Dow Jones Transportation. Notice Dow Jones Transportation closed with a new low on Monday. Yesterday it did not close with a lower low. It actually closed up. And today it came back up and filled this gap and also moved above the 50%. Now remember, this is important. Monday it closed with a new low compared to, from the all-time high. And yesterday it did not close with a lower low. It closed up. Now looking at the Dow Jones Industrial, notice the Dow Jones Industrial yesterday, it closed with a new closing low from the all-time high. Remember, we just said the Dow Jones Transportation closed up yesterday. And today, the Dow Jones Industrial also came up and touches the 38.2 retracement. Now, yesterday, the Dow Jones Industrial closing low is what we call a non-confirmed Dow theory low. And the implication on that is that we expect the Dow Jones Industrial to get a bounce, and that's basically what we got today, okay, because that was a non-confirmed low. Now, are we going to see a lower low? Well, we're going to take a look at that from the SPY and the E-mini S&P 500 to see is this the low or not. And look at the New York Stock Exchange Composite Index. It also closed with a new closing low yesterday, below the June low. When I say closing low, we're talking about from the all-time high. Prior to this recent downdraft here, the June closing low was the low from the all-time high. Today we also saw the New York Stock Exchange Composite Index close up. Now here, looking at this chart here, this is with all the indexes on a closing basis. And the blue line here, this vertical line, is where I mark off the day that the index made a new closing low prior to today or prior to this week, okay, the June closing low. Right here is the New York Stock Exchange Composite, and this is the Dow Jones Transportation, and the Dow Jones Industrial, and S&P 500, and the Nasdaq 100, the Nasdaq Composite, and the Russell 2000. Now here I also have a dash line, a vertical dash line that point out the new closing low, right, after this all-time high here. So here's the new closing low yesterday from the New York Stock Exchange Composite. A couple of days ago, Monday, for the Dow Jones Transportation. The Dow Jones Industrial yesterday, along with the New York Stock Exchange Composite. So was the S&P 500. Now you notice that there is no dashed line for the NASDAQ 100, the NASDAQ Composite, and the Russell 2000 because they haven't closed lower than the June low. So what this is saying is the index that is weighted down with a lot of these large cap and blue chip, the energy, financial, those been kind of weak and those kind of been hitting the index on the way down. We know Apple and Tesla is part of the S&P 500, okay, and those kind of carrying the S&P 500 a little bit because you notice Apple really haven't been taken down until the last couple of days, all right, but still it has not even come close to its June low. So we're still waiting for that, and it's likewise for Tesla. Okay, so obviously there are other stocks that is waiting down on the S&P 500 and the Dow Jones Industrial. Okay, those are more of the industrial and also the financial. And also you see the transportation, we already know FedEx and the trucking and the airline been hit. Now they are coming back up. The transportation came up strong yesterday, and that is probably due to the lower cost of energy, not necessarily that economic activity is picking up to signify that the Dow theory indicate that better time is here. Okay, so that's probably not the case. And that's one of the premises why I also think that the Dow Jones Industrial will see a lower low. But we get the market to tell us, is that the case or not? Now let's go and take a look at the SPY and the S&P 500, E-mini S&P 500 futures. Let's start off with the E-mini S&P 500 chart here. This is the 60-minute chart. Okay, what I did is also did a composite volume profile between here on August 16 to yesterday. Okay, and basically I want to identify some of the near-term zone to keep an eye on. Okay, so let me go to the chart here and give you what different line represent. Let me zoom in here. Here, this last line is the overnight low, and this is the overnight high, and this is the overnight session point of control. Now, these are the zones that I have put in, and these are basically the high volume node here, this two zone. And this right here is the edge between this gap. So those are the three level or three area that I'm keying off today. Now we remember this high volume zone here that we talked about last weekend video. So I'm not going to go back and talk about that. If you want to check that out, go and watch the weekend trade watch video for detail on that. First, look at what happened today. It opened, this is 60-minute now. It came up to this first zone. It paused for a little bit. It came back on back test, it paused a little bit and then push up to the next zone. And then came back also again, back test this zone here. So you see these high volume area have a tendency to attract the price and spend a little time there. Then it pushes up and try to get away from this zone and move up to this edge and pushes back again. It back tests this zone. And notice it made an attempt to try to get up to this edge again, and it pulled back. Once again, it tests this zone before it finally, in the last hour and a half, it pushes up to this edge, right, and then move into the gap, and then we have a liquidation break and came back down. So right now it closed near this edge, right inside of this high volume area. Keep an eye on this. The key thing to watch is this level here, the overnight low. Now, this overnight low is not what we call the regular trading hour session, the RTH. So in order for this low to be official, it has to be touched or tagged in one of the regular hour trading session, the RTH. So this low here indicates that eventually the E-mini S&P 500 will come down to this low, which is 36.13 or lower. Remember, we have a low volume zone here. So most likely we'll see it come down to this low volume zone. Now let's switch over to the SPY. Here we are looking at the SPY. Again, I basically have done the similar thing as I show you on the Emini S&P 500 future. Basically did a composite volume profile, identified these three zones. And you could see that when it opened, it came up to this zone, back test this zone, move up to the next zone, and then back test it again and wobble a little bit before it pushes through, and it came back down and back test it again. Then it finally got up to this edge here and move up into the gap and then pull back and close back inside of this area here, this composite high volume area. This is the overnight low. And this is the June low, right? The June intraday low, because I just put it there to tell you that we're basically looking for that low to get tagged, which we did yesterday. These right here, it took them out. Okay, so now we're basically looking for the price to come back down, because when the Emini S&P 500 pulled back to its overnight low that was made yesterday, last night, we will see the S&P 500 and the SPY will come down, take out this low. Now, also in addition to that, remember, we have this lower range of the expected move, this weekly expected move. Will it get tagged this week, or will it push up to the 380, this upper range? We don't know. It could very well that it could come up, take out this resistance here, right, and move into this high volume area and then push it into this upper range of the expected move. Or tomorrow will continue to move back down, and this is basically just a one-day dead cat bounce and then come into this zone and then move down and tag this overnight low on Friday and possibly push down to this lower range of the weekly expected move down here near the 356 area. Okay, that's one possibility. So that's why with this overnight low, this hanging overnight low from the Emini S&P 500, this right here is telling us to expect a lower low from the S&P 500, and that could imply a lower low for the Dow Jones Industrial. So that's the reason why I'm looking at this thing. Now, let's go and take a quick look at the internals. Let's start with this sentiment chart here. So you can see that the VIX move up above the 30 the last few days, and today it is coming back down and try to get back under this 30 and close at 30.18. It was as high on a daily close basis of 32. Of course, we've seen a little bit higher than that on the intraday. And also the put call ratio is above 1. So obviously there's still a lot of market participants buying puts. And here the New York Stock Exchange up-down volume ratio, it closed at 8.6 to 1 in favor of the upside. But during intraday, it was high as a little bit above 12 to 1 on the upside. And the daily advanced decline, you can see there's over 2,400 advancing issue outnumber the declining issue. So that is a broad market rally today. The number of new low, the number of stocks that make new low contracted tremendously. It's only 295. Yesterday, it was 897, and the day before that on Monday, it was 1,086. And here, the cumulative AD line, the New York Stock Exchange cumulative AD line, we got a low here, and we also got a low here on the S&P 500. So they are both making low, and that is indicating that there is no divergence. And here's the NASDAQ up-down volume ratio of 7 to 1 in favor of the upside today. Almost 2,800 more advancing stock than declining stock. And the number of stocks that make new 52-week low came down to 365. Compared to yesterday, it was 891, and on Monday, it was 983. And here, looking at the NASDAQ cumulative AD line, it put in a new low the last couple of days, but look at the NASDAQ 100, it's still above the June closing low. And this right here indicates that this NASDAQ 100 will need to come down to take out the June low. So that's one of the reasons why I am looking for the NASDAQ 100 to come down, and that most likely also implies the Russell 2000. Now, let me just leave you with this particular chart here, this market profile chart on the Emini S&P 500. Look at these right here. This right here is the single print, and here the single print. So these are what we call poor structure, and the close was up here today at 37.35. So we expect the single print will likely get filled or tagged, on the way down in the next couple days. Then you look at this right here. There is a poor low here. Yesterday it closed. It dipped below the June low. So here's the next low, or the next market structure that needs to get tagged is the poor low that left behind last year, December 11th. Those are the key level to keep an eye on tomorrow. Is this point of control here, these, and also the possibility of this poor low from December. Now on the upside, come up, we could see this point of control from July 14 get tagged at 3757.75, and also possibly the September 22nd point of control as well. Okay, so those are the levels to keep an eye on. So if you find this video to be informative and useful, and be sure to smash that thumbs up to help me promote this video. Thank you for watching, and stay safe.